Now, private investment firm 1789 Capital has ties to conservative power players like its founders, Omid Malik, Rebecca Mercer, and of course, Donald Trump Jr., who is now a partner there. It also now includes former Citigroup's co-head of equity capital markets in North America, Paul Abrahimzadeh, who joins us now. Kaylee and I were just talking about defense and the need for more defense spending, for the need to really ramp up the American presence as it pertains to what you're seeing both in the Middle East as well as Ukraine. Now, you have been part of the round of Anduril recently. At the same time, you see traditional companies, Lockheed Martin, trading kind of flat to lower very often in public markets lately, but Palantir and OpenAI really gaining the spotlight. What does this say about the future of defense spending and how your company is willing to put work on defense?
Thanks, Sonali. Traditional defense companies are critically important, and they play a very meaningful role within the U.S. economy and also protecting our borders. The reality is, though, as we're seeing with every sector across the country, technology disruption is coming at an incredibly rapid pace, and defense tech is a prime example of that. We were fortunate to be in the most recent Series G round for Anduril. They raised $2.5 billion at a $28 billion pre-money valuation. The KPIs for that business are exceptional, and it's really driven by three things. First, the increased defense spending expected domestically in the U.S. to protect our country. Second, if you look at the president's achievements with NATO, for the first time in history, getting NATO countries to contribute 5% of their GDP to military spending, up from 2%. That'll be a large tailwind for global defense spending. And then third, this pivot towards drones and technologically driven AI-incorporated warfare. All of that is going to be important. That plays into the hands of defense tech companies like Anduril and others in our portfolio.
It's interesting. You yourself have recently moved to South Florida. You have a lot of big private capital players that are drawing into their closeness to Washington. Carlyle comes to mind for me as one of them. Carlyle, KKR, both known in the space of defense. How do you see private capital changing their strategy around defense, given what you're saying about the role of technology and AI?
I think the private markets right now are giving you a great lens into what to expect in the next 3 to 5 years from a public capital markets perspective. You've got a lot of now scaled late-stage private defense tech companies that in just a number of years have achieved meaningful revenue scale, very strong growth based on the trends we talked about. And ultimately, those companies are going to be public at some point in the near to medium term. They are going to be what we believe to be fantastic public stocks and ultimately playing into the thesis we just talked about. This is an industry that was relatively nascent 5 to 10 years ago. And now with companies like Anduril or Shield AI or Saronic, Firehawk, Hadrian, they're now achieving a scale that's putting them on the map alongside some of the best-in-class AI and software companies in terms of the investable landscape in the private market.
Speaking of AI and software, 1789 has been a part of the Elon Musk universe with xAI, an investment there too. Of course, a lot of changes there. Why? What is the promise here of xAI, and what does the public not see in terms of how the AI company and the social media company can create a bigger giant in the future?
Elon is by far one of our generation's best entrepreneurs and technologists. He clearly is incredible at building scaled N of one businesses. And the reality is, as we look at xAI, we think it has massive upside potential. We've invested in multiple rounds of the business. Clearly, there's a lot of competition in the form of OpenAI and Anthropic at the top of that group of LLMs. xAI has a number of different levers, not the least of which is the fact that he combined X with xAI. We were invested in both companies at 1789. Elon was a first mover in acquiring feedstock that is critically important as the data set to then drive everything coming out of the LLMs. We saw in the form of Reddit's IPO disclosure ahead of that transaction that they were starting to charge for their data. That can ultimately be a very costly input for LLMs. And we think Elon was very early to make that decision to integrate the two platforms. Also, the ability to cross-sell between xAI and X, taking the 600 million user install base at X and getting them to adopt Grok, we think is a very valuable upside opportunity for xAI.
I want to pull up a tweet by Pierre Ferragu, who is an analyst closely followed when it comes to Tesla stock. The reason I want to pull it up is because he talks about how he's going to terminate his ChatGPT Pro subscription to only keep Grok 4 super heavy going forward. You can see what he's saying right there on the screen. How do you get comfortable with Grok after the most recent hallucinations and reference to anti-Semitic posts? Does that not concern you as an investor?
It's definitely concerning, but I think the reality is all of the LLMs are subject to hallucinations, and they're going to have to course correct any errors made by their platforms. And I think Elon was very quick to do that. So that's just part of refining these models. It's unfortunate, but it's been addressed. Kudos to Pierre. I think he's spot on. We believe in Elon's ability to drive XAI and Grok on the fastest path towards AGI. And I think everything Elon has said recently is highly encouraging in terms of achieving that very quickly. Keep in mind, he's built this incredible business empire, and you don't need to look further than SpaceX, which is another portfolio company, investing $2 billion in an XAI. Elon's ability to pull levers across his portfolio of scaled trillion-dollar-plus equity value businesses is incredibly valuable, and it's frankly a moat that other companies don't have.
We recently reported that SpaceX could be looking at a valuation of $400 billion, making it ever more the most valuable private company in the United States. You get to see a lot of private companies. Is this type of magical valuation reserved for Elon Musk, or are you seeing valuations rising in other pockets of the private markets as well?
I think first principles of investing is always to try and identify a big problem with a large moat. And if you think about space, Elon is solving a huge problem that was frankly a vacuum left by NASA. You could argue it was underfunded over the past 20 to 30 years. Elon stepped in the private market, built SpaceX. It is an N of one. There is no competition at scale in space. He's proven that. He's also got Starlink, which is incredibly valuable and frankly redefining next-gen telecoms and the ability to communicate and access Wi-Fi anywhere in the world. So we think it's a super valuable platform that has still meaningful upside from this most recent mark. And again, his ability to partner across his portfolio of companies is highly differentiated.
Is it important for you as an investor to see Elon Musk repair his relationship with the White House?
I think that's up to Elon and the president, and we're hopeful that's addressed. Ultimately, his companies are incredibly important to the U.S. economy, and he's a leader in defining new industries that he's breaking into, whether it's EV, whether it's AI or space. And so we're hopeful that all of that is copacetic and hopeful for a near-term resolution.
So, switching gears here, one of the reasons your team is in New York is because of a SPAC merger. Paul, you worked at Citigroup the last time SPACs were hot, right? Were you surprised to see the SPAC market come back this year as hot as it has?
No, listen, I think if you look at where the market is trending year to date, the broad market's up 5 or 6%, but if you look at ultra high growth businesses, they're dramatically outperforming the market. SPACs tend to be levered towards earlier stage high growth industries, and not surprised to see that asset class performing well. Grab-A-Gun is the company that CLBR, our second SPAC, is taking public. It is, at this point in time, one of the best performing SPACs we've seen post-pandemic. An incredible achievement. Redemptions were announced on Friday. Virtually no redemptions, almost zero.
Many of these SPACs are Bitcoin treasury companies right now. Is that not screaming froth to you?
To some extent. I don't think you need to look further than the IPO market in the case of Circle from a stablecoin perspective to show the astronomical performance in the aftermarket, the sky-high valuation. It's really less about the product and more about the asset class, meaning anything levered to crypto right now is incredibly well bid, whether it's the crypto asset itself or the equity derivative in the form of an IPO or SPAC merger.
Paul, really great to have you here with us today. That is Paul Abrahimzadeh. He is 1789 Capital partner. Pretty new job, by the way. Thank you for joining us here on set.